You make a higher salary today than you did 5 years ago, but somehow your bank account is completely empty by the 28th of every month. The extra income arrived, but the financial breathing room never did. This happens quietly. You get a promotion, a new job, or an annual bonus, and invisibly, the baseline of your life rises to meet it. The slightly nicer apartment, a faster internet plan, eating out twice a week. This chart shows exactly how this trap operates. As the income line goes up, the spending line shadows it perfectly. The space between what you earn and what you spend is called the gap, and it is the only place where true financial freedom exists. When spending rises to perfectly match every raise, that gap disappears entirely. We justify these upgrades by telling ourselves we worked hard and earned it. Our brains frame the spending as a reward, masking the fact that we are expanding our lifestyle to consume every single extra dollar. Or income does not automatically equal more freedom. If the gap between earning and spending stays closed, you haven't moved ahead. You have simply gotten comfortable being broke at a higher salary. Society heavily markets debt to the middle class by disguising it as success. We buy into these markers of achievement, completely unaware that we are signing the paperwork on a very expensive iron cage. Take the maximum mortgage. A bank will gladly run the numbers and approve you for the absolute upper limit of what your monthly income can tolerate. But their math only calculates the loan itself. It ignores the crushing property taxes, the inevitable roof repairs, and the actual day-to-day cost of living inside those walls. This bar chart visualizes another massive wealth destroyer, the dealership trade-in. To give you a lower monthly payment on a newer car, the dealer rolls the debt from your old car into the new loan and extends the timeline from 5 years to 7. The amount you owe wildly outpaces the value of the vehicle, leaving you completely upside down. Then we pile on the brand loyalty taxes and the costs of keeping up appearances. We pay massive markups for logos that signal wealth, and we finance European vacations on credit cards to impress peers who are quietly drowning in their own exact same debts. Optimizing your finances for status guarantees you never actually own anything. You spend decades renting your life to finance approval from an audience that isn't even looking. Big purchases aren't the only leak. Wealth is also bled out through microscopic daily choices that pull thousands from your income quietly without triggering any alarms in your brain. A $7 delivery fee because you're tired, 12 different $10 streaming services running silently in the background, premium app upgrades and unlimited data plans you rarely use. On their own, they cost almost nothing. Multiplied by repetition, these minor conveniences become a massive, permanent reduction of your annual income. When that constant financial drain causes stress, we often turn to retail therapy. The brain demands relief, so you buy something for a quick hit of dopamine. That purchase creates more debt, which adds to the anxiety, which demands another purchase to cope with the feeling. Meanwhile, every dollar is aggressively assigned before it even hits the bank account. The entire system relies on the mathematical impossibility that your car, your tooth, and your home's air conditioner will never break. Living paycheck to paycheck with zero savings means you aren't actually stable. You are simply one cracked tooth or broken transmission away from total financial collapse, and you're treating the symptoms of that anxiety with the exact spending behaviors causing it. Financial institutions understand exactly how human psychology operates. They have engineered their minimum requirements specifically to harvest your future income for decades. This diagram illustrates exactly what happens to a standard $3,000 credit card balance. A minimum payment of $60 feels safe and manageable, but watch the math behind the screen. $50 is instantly siphoned straight to the bank as interest. At this rate, a small balance will take 12 years and double in total cost to pay off. The insurance industry pulls a similar trick with whole life policies. Salespeople pitch it as a forced savings account, pocketing huge commission fees up front, while your money sits trapped, growing at barely 2%. You could have bought cheap term life insurance and invested the difference. Look at these two curves illustrating the brutal cost of delaying retirement contributions. Compound interest relies on time, not effort. Waiting 10 years to start doesn't just mean you start 10 years late. It means you surrender 30 years of exponential growth on the back end. These products and terms are pitched as tools to help you manage your money. The math proves they are perfectly engineered systems designed to manage you. Eventually, the budget snaps. There is simply too much month at the end of the money. So instead of addressing the spending, you jump on the treadmill of the side hustle. You start driving or freelancing on weekends just to survive. You trade your evenings and your physical health for extra cash. But that new income is immediately absorbed by the exact same bloated lifestyle. The extra money just covers the overspending, ensuring the underlying financial disease remains completely untouched. Earning an extra $500 requires constant, grueling effort, month after month, forever. Cutting $500 in unnecessary expenses solves the problem permanently, yielding the exact same financial result without trading another minute of your time. True wealth has absolutely nothing to do with the address on your mortgage or the brand name on your jacket. It is the cold, emotional detachment required to look closely at your mathematical reality and make hard choices. The system profits from the biggest loan and the longest timeline. To actually escape it, you have to stop optimizing for appearances, reject the endless upgrades, and ruthlessly defend the gap between what you earn and what you keep.